Good morning, good afternoon, good evening, wherever you're joining us from. Welcome to this edition of the Mambo Spaces. I'm going to start with a conversation here with Peter Mutigi from CAK. I know CAK is one of those parts of government that, for some individuals, it might not necessarily be that well known. It's among the younger regulators that we have. Peter, give us an introduction to CAK. What do you guys do and why should Kenyan taxpayers pay attention?
Thank you, Rama. Also, thank you to Mwango Capital for hosting us, the committee and I, representing the authority. As you mentioned, yes, the truth of the matter is sometimes, unless we've made a big announcement, finalizing party here or there, or maybe a merger or acquisition which gains traction, some people don't quite know us. Some people may not know about CAK. So we are the Competition Authority of Kenya, not CA. Competition Authority of Kenya is a regulator. We are domiciled under the Treasury, the National Treasury. We are located at CBK Pension Towers in town. That's along Harambee Avenue on 15th floor of that building. We are a multi-sectoral regulator. Our mandate, so to speak, is two-pronged. We deal with matters of competition and also we deal with consumer protection. I'll just give a brief highlight of each, then we'll dive right into the conversation. Number one, I've just mentioned mergers and acquisitions. We analyze mergers that reach a certain threshold. If you are 500 million Kenya shillings in terms of combined assets or turnover, whichever is higher, there's an obligation to seek approval from the authority before you merge with another company or before you buy another company to become one. We have no problem people merge for various reasons, so it's a good thing. However, we are cognizant of the fact that left unmitigated, mergers or acquisitions can have a negative impact on competition. For instance, if you're just three companies that are in a space, perhaps let's talk about telecom sector. Imagine a scenario where the bigger player just buys off everyone, retailers. Assume we only have one retailer operating perhaps in Nairobi. You as a consumer, you don't have choice. The player themselves will be so big that they could do harm to you as a consumer. They could price their products or services without more or less caring about the impact it will have on the consumer. That's mergers and acquisitions. So think about NIC, CBA, to become NCBA, transactions with Coca-Cola. There are quite a number in different spaces in the horticulture sector. There are so many of them. Number two, we have enforcement and compliance. So enforcement and compliance is the core of what we do, and perhaps people think that's only what we do in terms of competition enforcement, but that department deals with ensuring that there's effective competition in the market, that the players in various markets are playing by the rules. Think about things like abuse of dominance, and you have over 50% of a market, and you start behaving in a manner that trying to infringe or trying to kill other competitors. So once we find evidence that you've done that with abuse of dominance, a cartelization where several players, we did Steel 2 years ago, penalized 14 players, close to 800 million Kenya shillings for being in a cartel in the steel sector. There was paints, there were around 4 players that we penalized them around 40 million. These are investigations, these are just sample. That's cartelization, market allocation, where a player says or determines that you, as Rama, perhaps you're supplying, you cannot go beyond this region or another region. So you as a consumer, again, you don't have choice and all that. Anti-competitive conduct, that's what actually falls under this department called enforcement and compliance. The compliance bit of that name in the department is that once we make even a determination on a merger, we sometimes place conditions on the parties. For instance, don't fire employees within this period, maintain contracts with SMEs. So the department thereafter comes to check that the rules or the conditions we applied are being adhered to. Again, if we find cartels, we tell them to enter into a competition compliance program to understand the benefits or our mandate and the benefits of effective competition. So the department goes in after the fact to check that what we did or what we applied is being adhered to. And also, if we make a policy, more or less a policy change, then what happens? What happened 2-3 years down the line? Did it have the intended impact or were there unintended consequences which we perhaps need to revise? Then lastly, the technical department we have is called buyer power. The most famous case involves one of the top retailers in Kenya. We penalize them at some point because buyer power is an instance where there's the buyer here who has power. So I'll explain the buyer. The buyer is someone who controls an infrastructure that is so important to the people supplying them with goods or services that they may, for whatever reason, misuse this power. So think insurance companies. An insurance company has suppliers under them. So they're the buyer, the insurance company, and they have suppliers. And let's assume it's something to do with motor vehicle repair. You have an accident or an incident with your vehicle. There are garage owners, there are motor vehicle assessors who check the costing of the damage to the vehicle. So these are suppliers to the buyer, in this case being the insurance company. The people who supply groceries to the supermarket, the buyer in this case is a supermarket. So this can be replayed obviously across many sectors. So the buyer, in this case, when they're sitting on a bargaining table, they tend to hold a lot of power. So abuse of that power manifests in various ways. They refusal to deal, they don't want to deal with someone. They may delay your payments. You agree that you'll be paid every 3 months, and 5 months down the line, they're still not paid you. And any attempt to seek them to honor your invoices perhaps are met with hostility, sometimes even threatening of the termination of the contract, or the contract is actually terminated. So that abuse of buyer power is again a key element of what we do. So the last bit is what the fourth technical department is under consumer protection. This is the focus of our discussion today. So as a consumer, you're protected under the Constitution. The Competition Act, again, has elements of consumer protection. We receive complaints or we go to the market and check that people are not infringing upon the rights of consumers. And that is what Mr. Kamiti, the manager in charge of that department, is going to discuss today. So I'll allow him to come in, and I think that's about it in terms of an overview of what the authority does.
Mr. Kamiti.
Thank you, Rama. The Mwanko Capital and the opportunity on consumer protection issues. The Consumer Protection Department is tasked investigating and physically enhancing the welfare of consumers in the Kenyan economy. We get this mandate from the Constitution, then the provisions of the Competition Act on consumer welfare come into play. And the various provisions or the various clauses through which we undertake these investigations, we have false or misleading representations with unconscionable conduct. We look at aspects of product safety and product standardizations. We can be able to receive complaints either from consumers or yourselves, but we also have a mandate to go out into the public. We undertake mystery shopping. We go out and purchase products or look at services and see whether their violations are on the right.
I've just put up a link to the 2023-2024 annual report that CAK put out quite recently, just so that some of our listeners can essentially just read that and at their leisure follow along and see exactly what cases that we're talking about when it comes to consumer protection later on as the entire conversation does continue. But I want to start with the fundamental things. We often really just do not think about consumer rights, at least not in this marketplace. We have an idea when we've done wrong, dealt a bad hand, lousy service by a service provider, by people we buy things from. But what are the key consumer rights that all of us ideally should be aware of?
It is very true that there are key consumer rights that every Kenyan should be aware of. Most of us are not aware of these rights. The first one is consumers have a right to goods and services of reasonable quality. As I indicated, all these rights are entrenched under Article 46 of the Constitution of Kenya. And the second right is that consumers have a right to information necessary for them to gain full benefit from goods and services, meaning that when you go to a supermarket and purchase something, or you go to a financial services sector to get a facility, a loan, then you need to be given information. You have a right to that information so that you are able to gain full benefits from the product that you have bought or the service that you want from the third supplier. The third right is consumers have a right to protection of the safety and economic interest. When we talk about the rights to the protection of their safety, we look at product safety, we look at what you have spent that particular product or service. And the last is consumers have a right to compensation for loss or injury arising from defect in goods and services. Because you have a right to be given that service that is cognizant of the amount that you have paid for that product or service. And if there is a situation that will require that you are refunded the money that you have spent or the aspect of replacement, then you have a right to get that sort of redress for any loss or injury arising from defects in goods and services.
One of the things that strikes me, just going through some of the cases that CAK has dealt with, right, over the years, the impression I get is that companies essentially are abusing a position, right? It's abuse of buyer power in some senses, because a lot of these cases only get resolved once the regulator shows up. I'll read some examples here so our audience can follow along. Margaret Muhaki versus Kiko Sacco. The complainant withdrew her membership from the Sacco, but she was not refunded her savings. But the complainant was refunded only after the authority had intervened. In e-commerce, for example, Collins Jerry versus Killimall. The complainant bought 2 items on the Killimall app. One item was missing at the pickup station, but the delivery note indicated that both items are not packaged. And Killimall was insisting that both items had been dispatched to the pickup station for collection. But only after intervention by CAK did Killimall then deliver the item in question. And there are quite a few of these that come up. Is the general attitude that I guess you encounter that companies just feel because they've not been held to account in the past, therefore there's certain behavior that's become entrenched in the marketplace, so they feel they can get a lip?
Yes, indeed. But the sort of feeling the authority gets each time we handle some of these complaints. And that's where our role comes in protecting consumers from a business practice. Because if we do not come in, then the rights of consumers are going to be violated. But even as we resolve these complaints, one important thing we do to be able to create awareness and to ensure answer the app is that we go ahead to educate these businesses. We sit down with them and educate them about the need to enhance the rights of consumers. And our role is really spelled out under the Competition Act of 504. And how do we do that? We do that through various ways. Other than receiving complaints from consumers, we initiate investigation into those issues, and especially those we made it systemic or that will empower the population. Talking about the example that you gave on the CAK is that once we receive the complaint and resolve, we work with the regulator because there's a regulator in place where we inform them about this complaint that we have received and how we have handled them. But again, we go ahead to look at whether this conduct is widespread and see that the conduct is probably widespread, then we're coming to take a bigger action. I'll give you an example. In the issues of transparency and disclosure, transactions conducted on mobile phone, then we did not just look at one digital financial service, right? We looked at all the providers of digital services, from the telecoms to the digital loan app to the banking sector. And then we came up with the requirement where they're supposed to disclose the transaction conducted. And we did and that was about 6 months to 1 year later, we noticed that the awareness levels of consumers on fixed charges for transactions conducted through the mobile phone increased from as low as 25% to a high of 90%. So we believe that this really impacted quite a number of consumers. So we are able to intervene in various ways, to carry out studies and surveys to gauge consumer, to be able to confirm these issues that you, given the example that you have indicated, is that we come in to advise the government on consumer reform issues. For example, we gave an advice to the government at the advent of digital lending that there was need to regulate non-deposit lending, including the digital loan, but also to really intervene in a deeper way. We don't just work by ourselves, we liaise with other regulatory bodies.
But you mentioned the next area I want to go into, digital lending, e-commerce. Here, it's very ubiquitous now for most Kenyans anyway to be using mobile money by default rather than paying the thing in cash. But there's always this interesting example that comes up of non-disclosure of what charges fall with a specific transaction. So, for example, if you pay for parking with your SSD, you may not always be told, oh, by the way, to do this, we're going to charge you X amount of money, right? So there'll be the parking fee, but then we're going to deduct X amount of money out of your airtime in order to facilitate the service. And that may not be properly disclosed. How do you handle that sort of behavior in the marketplace where companies will be making money? And we're not saying they don't have right to make cash, but there's no proper disclosure of all the fees involved in the transaction.
Indeed, all fees and charges need to be disclosed to a consumer prior to conducting a transaction. So if you're paying for parking and you're using either USSD or any other phone, especially the digital phone, then you need to be aware of how to charge. We are seeing that we have started receiving what I would say inquiries on this phone. And what we normally do, as much as we may not have received that particular complaint from any of the consumers, what we do is that we proceed to handle that. And if you look at especially it's an unconscionable conduct act, there's a provision, there's a clause that indicates that a supplier who is supplying any of the financial services needs to disclose, especially with banking, insurance, or any other service, needs to disclose all the fees and charges associated with that particular transaction. And what the authority has started doing, as much as we have not received any particular complaint on this, we have started engaging some of these companies because they need to disclose or put some sort of sign at the point where you're making the payment that if you're using USSD to make payment, then the transaction cost is going to be 10 shillings because of that how they charge customers for such a transaction. But what has also been made available is the opportunity for you to conduct a transaction. I'll give you an example. That's why there's the fees that is disclosed to conducting a transaction. So if you are not happy that you're going to be charged 10 shillings on top of that, then you have the opportunity to press 2 to cancel the transaction and then proceed to pay cash. You might ask, what if I did not have cash and you only had that USD? Is that, that is the choice that has been created. However, we still insist that there should be some sort of signage at the point of paying, saying that while using USD, there's going to be a transaction cost that you're going to be charged.
One of the things that a lot of our listeners will see when they're reading through some of the cases we're referring to in terms of consumer protection is that there's a lot of referral in some cases to other regulators. There are cases that end up being handled by the Civil Aviation Authority, for example. There are others, like the example you gave, you're working with SASRA, the CAK regulator, and so on and so forth. How does that usually work? So say, for example, in a hypothetical situation, if someone's got an issue with their SACO, they come to you with a complaint. Then what happens at that point? Do you have jurisdiction over that because it's a consumer protection issue, or does it have to be handled collaboratively with SASRA?
One thing I'd like to indicate is that the Competition Authority of Kenya has the overall mandate of consumer protection, and we look at that across all sectors. And when we receive such a complaint, is that we have procedures which we use to assess the complaint. And at first instance, we can proceed to handle it. But what you do first is that we tell the person who has complained, we ask them, did you report this matter to that particular undertaking that has agreed you? And if they reported that it was not resolved, then you can proceed to handle it, because you want to give an opportunity to the accused party to resolve the matter. But if it has not been resolved, then you can proceed to assess it. But sometimes as we assess the matter, we could establish that there are a lot of technical aspects to it. There are complaints that we receive, for example, insurance services that touches on really technical issues relating to the insurance. Or we could receive complaints regarding motor vehicles or some issues in telecommunications that are technical. And at that point, we invoke the provisions that we have within the law, because under Section 68, we can be able to forward such complaints to the relevant government agency for resolution. And we not just throw our art for most of the regulators that you have indicated. For example, even Communications Authority, Insurance Regulatory Authority, Central Bank of Kenya, we have a memorandum of understandings that we have changed. And it is through that avenue that we are able to forward these complaints to the regulator to resolve it. So that's how we do it. We don't investigate the matter together. Is that we undertake our first assessment, and it is something that we can proceed with, then the authority proceeds with that. If it is something that we feel is highly technical in nature, then we forward to the relevant regulatory body to handle.
The other trend that I see emerging, at least in some of the cases that you've had to deal with, is a situation where, for example, someone comes in, they've got a complaint, but they're not able to substantiate it. I'll give you an example here. There's one in the annual report of Anthony Wambua versus Mogo, where the complainant took a logbook loan of around $1,600, but the sum was dispersed in a Kenyan shilling equivalent. He was required to repay it in US dollars using the prevailing exchange rate. But even after making payments of $1,246, Mogo still said he owed them another $630. And in this instance, the complainant failed to provide the evidence in support of his allegations and the case was closed. So even if consumers come to the UK, at the very least, right, it's important to have all the documentation in hand to support the allegations that they're making against the firm and so on and so forth. The ultimate idea here is that if I'm coming to you as a complainant, I need to have the data in hand, receipts, proof of purchase, communication with the firm, rather than just showing up and saying, so-and-so screwed me over, they provided this service or they provided this good, or I paid them for a service or good that they did not deliver. But I need to have evidence in hand to prove that case.
You're very right. But some of the consumers that come to us, or those who complain to us, we realize they did not have any evidence. The authority obviously is subject to the Fair Administrative Action Act. We have to be fair to all parties, consumers and both businesses. And some of the biggest misconceptions that Kenyans have about consumer rights and consumer issues is the application of their responsibilities. And we go ahead and penalize some of these businesses. And we found instances where consumers have lodged complaints and either they do not have the evidence or we feel that there's an element of where the consumer is not telling the truth. And we are trying to educate consumers as much as possible. The first thing that you have indicated that they need to have evidential information. They need to keep their receipts. When you make a purchase, then you need to keep your receipt, you need to keep your warranty card, the agreement that you have been given for a service that you are taking with a particular provider. And most importantly, and the first obligation, the first line of defense is you as the consumer purchasing the product. When you go to the supermarket to purchase a product, you're still obligated to read the labels. If it's the price tag on the shelf, then you're obligated to know what the price is. Or the product itself, then you need to go through the list of ingredients or the nutritional information and to check whether the information that you have been given is good enough for you to be able to consume that particular product. Then also for services and loans that we have taken from these financial providers, that we find that most consumers do not read the terms and conditions. There are various reasons why they may not be able to read on the terms and conditions. It be because small in font or they are too legalistic. But what we have seen, the trend that is going on nowadays in financial service organizations, especially financial service providers, have seen that what they need to disclose to consumers is the information which is very relevant. Right now, when you go for a loan to any bank, then they're going to give you a separate document which shows the total cost. And that way, you're given the information necessary for you to make a decision on whether you want to proceed to take up that financing on. I keep on speaking about the laws because we have seen a lot of complaints coming in from the financial services sector, is that we are finding consumers not really to meet their obligations, such as loan payment. We know there could be issues with the disclosure of package fees and charges, but we are starting to see a situation where consumers are trying to bring complaints to us, and through our analysis, we were able to detect that this particular consumer who is complaining reported severally. And there were some applicable charges that didn't disclosed by that financial service provider, but the complainant did not adhere to that. So then they come to the authority, hoping the authority will come to intervene. So those are some of the things that we are seeing, and we are trying to educate consumers on the need for them to really meet their part of the bargain or meet their obligations, so that the authority, when it comes into undertake an investigation, then we can be able to be there to both parties.
Indeed. Just before we get into some feedback that's coming through on Twitter, given the fact that a lot of these conversations between consumers and companies on one hand, a lot of it has to essentially be on record, are you now seeing a tendency where some companies may try and avoid having written records of conversations that they're having with their clients, effectively trying to not have receipt that would essentially expose them to any sort of legal liability? So, for example, you're dealing with a client's matter on email, they end up having phone conversations instead. And that inevitably, once this comes up in court, it might end up becoming a he said, she said situation. Are you seeing that sort of avoidance behavior, if I may call it that, from companies?
I wouldn't know whether to call it an avoidance behavior, but we definitely say that. But how we handle that particular issue is that when we receive a complaint from a consumer, then we advise them to write to that particular business quite tiny with the responses that we give to our consumers or to any other party who writes to the authority, then we find that particular business really moving fast to resolve the issue. Why we are happy when the issue is resolved is that we know consumers would like a resolution which is very timely, fast, and we are happy when a business is able to resolve. But again, what the authority goes ahead because we may not have established whether that behavior was intentional or non-intentional, then we give a warning. We can give a warning to the company, and our warnings quite stern. We write a letter and indicate that if we receive such a complaint in the future, then the authority will proceed to impose harsher penalty on that particular business. So we work on the other way around in advice the consumer to pledge to the business and copy it to the authority, and then the authority comes in to intervene in that way. So that serves as some form of evidence that there was a transaction between the consumer and that particular business.
There's an interesting question that's coming in response to the space at the moment. So, particular individual, I'm not sure what their specific name or stamp is, but I'm just going to read out the complaint here. The person says this: I bought a microwave from a major Nairobi supermarket on the 7th of March. This supermarket refused to test it for purchase, but they assured me of a 14-day return policy. The microwave then made strange noises, so I went back a few days later, but no help was offered. On the 19th of March, still within the return period, I returned it. Now they say it will take 14 days to check it. If they refuse to test it at purchase, why should I be waiting now? What do consumer laws say about this? It's an interesting case here that we're dealing with, committee. What should we advise these customers to?
The important thing I've gotten from that, I've done a quick analysis, is that there was a 14-day return policy that when they return the product, they have to be looked at. And that particular consumer needs to be given a timeline. The supermarket needs to give a timeline from which they're ready to look at the product. But the timeline should not be long to prevent the consumer from enjoying the product that he purchased and the representation that particular product was due. And what I would advise the listener is if the supermarket does not get back to you, the audience, with ways with which you can be able to reach the authority and to lodge your complaint.
Indeed, and we'll certainly have a lot of those details coming in towards the tail end of this space when Pete and Co take over the conversation. There's another question here that's actually come in from Samir Tabe, and he's saying, look, he's still here. He's waiting for someone to refund his money. He says that the Civil Aviation Authority has essentially gone quiet, and the Competition Authority says, look, we've done our part. And here's a background to this specific case. East African Airways cancelled the complainant's flights, and then they failed to refund him the costs of tickets. This case did go to the Competition Authority. It's cited in that particular annual report, and CAK says the matter was referred to the Civil Aviation Authority and the case was closed. So in the event of a case like this, security, what sort of recourse does Samir have? Does he come back to you? Does this now go to a small claims court?
Rama, seeing situations such as this one that you have indicated, where several consumers just airline tickets from this particular business or even for any other business, and when we handle the matter and the referral of the matter to the Civil Aviation Authority, because they're the ones who license these institutions, is that unfortunately now the consumer cannot come back to us. And the only way they can be able to get a refund, because there is a business that has closed due to various reasons, is to now go to the small court. Fortunate that some of these businesses can be and some sort of awareness from consumers. And we're also receiving complaints, not just from the airline sector, but from other sectors such as the tourism sector. And we noted that a lot of these cannot be handled within the presence Competition Act. And these complaints or these issues border on fraud. So then there is an aspect of where the DCI needs to come in, especially with a company which may be amorphous, but there's also an aspect of going to the small claims court, especially if it's a business which has been in existence and really getting the redress one needs to get from the court, because unfortunately for such matters, the Competition Act cannot be able to provide that sort of redress.
Peter, I know you want to come in a little bit, at least in the case of the airline sector. Do you want to give us more details on exactly what happened with East African Airways?
What committee has informed you is accurate. This issue related to two different, or well, I think there were three different airlines. So they all went down or closed shop. There's small budget airlines. So in one case, we actually issued a cease and desist order. We found that despite the fact that they know they're in financial problems, they still go ahead and they keep their portal on the website open. They collect the tickets ostensibly for flights which they are aware they won't honor. So there's an element there again for fraud. So in this case, once we noticed that airline, not this one specifically about East Africa, we issued a cease and desist order. And since it's public knowledge, the order is on our website. It was Fly 540. So in this case, they went ahead and still collected. So once the complaints came to our consumer protection department, to just ensure that this problem at least stops, we issued a cease and desist order. We publicized it quite a bit, telling the airline to stop collecting monies from the public. I think that helped in this case. But what committee is saying is that sometimes, and in that specific issue of Fly 540, the truth of the matter is that we actually forward this to KCA and we also forwarded the same file to the DCI. Where we find that our jurisdiction is a bit limited or our competition law cannot allow us, we don't have prosecutorial powers, we can't do much about it, we forward to the parties or the regulator that has, or the government agency in this case, for instance, the police service, the DCI. So that was a background about these 2 or 3 airlines.
So then, unfortunately, Samir, it seems the next step for you here will be to head over to the Small Claims Court in order to try and get that refund. There's a question that's come up here. In my case, it came in on WhatsApp. What are the consequences for companies that are repeat offenders? If you find firms that are repeatedly violating consumer rights, breaching the law over and over again, and they issue a refund here, that one small case there, but it's a long-standing pattern of them just, for lack of a better word, dealing their clients a bad hand. What happens then?
So what we do is that we invoke now stiff penalties. We impose stiffer penalties on that particular institution. One, the things we do, we can impose a pecuniary penalty up to 10% of the previous year's annual gross turnover. We have done that for several companies. If you go through our annual reports, especially the financial services sector, where we have seen complaints coming in, and despite issuing several warnings to the businesses, even the complaints and not reduced, and we proceeded to penalize those companies. Another thing we do is we can report our conditions to reverse the infringement. And as much as we impose the conditions, is that we monitor the compliance with those conditions. And also what Mugambi has indicated is that we can proceed to forward this particular file to the Office of the Director of Public Prosecution for prosecution under Section 70 of the Act, is that upon prosecution, that party can be imprisoned for a term not exceeding 5 years or to 5 both.
One of the more famous cases that you mentioned that the authorities have to deal with has been, especially in the non-deposit taking lending space with specific firms. And I know Mogo has been pretty much one of the more common ones that we've seen pretty much right across the board. Can you walk us through exactly what sort of pattern of behavior we saw in that particular case? Why was it that individuals would come in and say, we borrowed X amount of money, but the amount of cash that we ended up repaying was way beyond what we borrowed plus interest? Was that just a matter of routine non-disclosure, or is it just routine overcharging of clients that we're seeing?
For that particular matter, was an element of false or misleading representations and what we call unquestionable conduct, where a supplier has a higher bargaining power over consumer. And what we saw from that particular situation is that consumer loans were being priced in USD. So your repayments were actually priced in USD, such that as much as you given your facility in Kenyan shillings, then your repayments were priced in US dollar. And you remember the time where the exchange rate of the Kenyan shillings to the dollar was at a high of about 100 days. During those times or that particular period, most consumers lodged complaints because what they were paying for as a loan charges was basically not sustainable. And then the authority would immediately an investigation into this particular aspect of it and noted that this was also in terms and conditions, knowing the loan terms and conditions. And that's where now I come to that And therefore, in testing some of these terms, the situation is either it may not have been disclosed, but again, it was the terms and conditions which probably the consumer was not able to detect. But then for that particular issue, then the authority had to not only penalize the company, but also we imposed a condition where they were required to resolve any other complaints that they are receiving. So far, they have been resolving complaints successfully, and the ones who took out the loans for that particular company, we've been receiving feedback that their issues are being resolved.
Just to follow up on that, was the issue here in terms of disclosure of the precise terms and conditions and the loans would have to be repaid? Was it that the terms and conditions are basically written in very specific legal terms? Legal circles, those guys would understand it, lawyers would understand it, solicitors would get it, but ordinary citizens like you and I will simply not understand it. Was it also a case of omission in the sense that they say we're going to essentially use the prevailing exchange rate or whatever the dollar shilling rate be, but then they're not specific on how we're defining what the prevailing exchange rate is? Was it the midpoint is published by the Central Bank of Kenya? It's some random rate bank that's known as that the consumer is not being told about. That lack of clarity, detail, was that also part of the problem?
It was the lack of clarity of the exchange rate because there was no set exchange rate that had been indicated in the terms and conditions, and there was no reference to the prevailing rate or what has been provided by the Central Bank of Kenya. So there was that ambiguity in the language, and also the failure to really contact the consumers and letting them know that because the current exchange rate has gone up, then your loan repayments are going to go up. Because ordinarily, you will see a reduction in the interest rates or an increase in the interest rates in the market. Is that ideally the financial service providers should contact you and indicates to you that your repayments are going to need to be increased, or we are going to enhance or to increase the period within which you're going to repay this loan because of 1, 2, 3, 5. So it was a combination of what we call the false or misleading representations by not disclosing such information, and the unconscionable conduct element of using that higher bargaining power consumer. And so what has been happening is in the resolution of these complaints is that all loan contracts were converted to Kenyan shillings. And that's now one of the conditions that was given in the settlement agreement with the authority signed with the company is that all dollar denominated loans should be reversed to Kenyan shillings and the undisclosed.
We're fast approaching 3 p.m., so I do have to bring the entire conversation to a close. Any final thoughts from your end, committee, on what we should be doing as consumers to try and make sure that our rights are respected by companies? Well, one, there's a whole list of complaints, of course, that you put out in great detail rather in the annual report. But let's say there are individuals who have been listening to this conversation for the last hour, they want to get in touch with CAK, they want to file a report. How do they go about it?
My final thoughts is trying to be as innovative as possible to ensure our consumers learn about what we do and how they can enhance their welfare. For example, we have embarked on raising consumer awareness to learners in junior secondary schools. Learners are the biggest influencers to parents and society, and we are hoping that this will enhance their awareness levels. How they're doing it is that we work with the Kenya Institute of Curriculum Development to provide content on consumer welfare. You can be able to reach us in various ways. You can write to us directly, complain at cak.go.ke. I would encourage all of you to go through our website, www.cak.go.ke. You can call us, our landline, or listen to your complaints. But also, you don't have to come to the authority. You can be able to lodge or to fill out a complaint form, which you can do that through our portal.
We're going to put in a brief with some of those contact details that committee and Peter, of course, are talking about, in case you have specific issues that you'd like the Competition Authority of Kenya to deal with, any cases you'd like to deal with, and of course, all the details that we've spoken about in terms of consumer protection cases that dealt with. We've listed that in response to the pinned tweet that has a space on it from page 157 of their last annual report from fiscal 23-24. Plenty of details in there that will make it very interesting to read in. Ladies and gentlemen, that brings us to the end of our Mango Spaces. Today, we've been covering the question around consumer protection here in Kenya. There's a lot of businesses that are still operating pretty much right across the board, holding on to all sorts of interesting new areas, e-commerce, the fintechs, insurance, and so on and so forth. And we often tend to speak about the growth element, right, that comes in with a lot of these investments, but very rarely do we ever speak about your right as a consumer not to essentially safeguard your hard-earned cash. Hopefully, over the last hour, we'll provide a bit of understanding on that particular space. But as always, these conversations are by no means definitive. There's plenty more that we could cover here, but we'll have to. We'll see you around on the timeline and, of course, in the next Mongo Spaces. Have a good afternoon.